Technical session, compliance with the technical and professional standards. To handle this session, we have CA V Jawahar sir. I request our treasurer to escort him to the dais and hand him over the floral bouquet. Mr. Jawahar is a practicing chartered accountant for over 37 years and well known in India for his presentation on various subjects. He served the Institute of Chartered Accountants as a managing committee of the member of Hyderabad branch during 1991-1995 and member of Information Technology Committee for the Southern region as well for the ICAI. He is the author of the technical guide for IS audits published by the ICAI and presented papers in India and abroad. He is a frequent speaker at various seminars of ICAI as well as those of SICASA. This endeavor, Mr. Jawahar got certified as an executive coach by the world #1 leadership thinker Marshall Goldsmith. Apart from being an executive coach, he is sought after speaker on leadership and conducts seminar on the seminar topic which enhance the skill and competence of the business leaders. His seminars are fun and informative at the same time. He is the member of the Indian Council of Arbitration. He has been appointed as arbitrator for or IRGC member by the National Stock Exchange. He is currently the executive member of the Indian Rural Health Services. He has also been appointed as the member of the audit committee of the Rotary International for 19 to 25 and he is the vice chair for the committee for stewardship over USD 2 billion. With this brief introduction, I welcome you again. Over to you, sir.
Good afternoon.
Good afternoon.
All of us are chartered accountants, right? No?
Yes.
So this obviously means that you had a very good lunch. So I would like you to please wake up. The previous session was an excellent session. I think one of the very good ones that I have heard on documentation. And I commend the speaker. He has brought in the internationality of documentation into us. A very vital one for us as chartered accountants, as practicing chartered accountants, and more so as reviewers. Because please understand that as a reviewer, you will not have access to the basic documentation that the practice unit has. What you have access to is only the documents that are maintained by the practice unit. And therefore, the documentation becomes very vital, not only for the practice unit as such, but also for you. So before I proceed, I want you to just brush up on certain basic aspects of auditing. Shall we?
Yes.
Yeah, and this particular part of it has to be interactive. Because there are some answers which I don't know, which I want to learn from you. So let's get into evidence. Documentation is evidence, ultimately. So I'm not going to ask you questions on IPC, but more on the relevance of as far as audit is concerned. So what do you think are the characteristics for evidence? Relevance. Fantastic. Yeah?
Reliability.
Okay. Yeah, reliability, authoritativeness, yes.
Independent examination.
Objectivity, timeliness, and there is one critical one. What is it? Sorry? Relevance. He's already said relevance. Relevance, there's something more.
Event.
Event.
Validation. Event.
Validation.
Proof of what?
Proof. You can have all these things, and if the evidence is not direct, it's not worth it. Isn't it? Any circumstantial evidence might corroborate. But unless and until, as an auditor, unless the evidence is direct, it becomes very difficult for us to work on. Now, what are the assertions that an auditor will look into for revenue items? Why I am taking you through this is because the next 30-40 slides that I am going to put through, you will immediately realize, so it's become so easy. This is just brushing up. All of us have studied it, all of us practice it on a day-to-day basis, but I am just trying to brush up your knowledge to bring it forth in proper terminology, nothing more than that. And you will realize that, oh, I knew all this and I have been using it. So don't worry about it. So just try to think about what are the assertions that we look at in terms of revenue items in a financial statement.
Passing of the title.
Completeness.
Existence.
Sorry, somebody said existence.
Existence.
Accuracy. Cut off. What you
Sorry?
Passing of the title.
Passing of the, I am talking about revenue items, sir.
Cut off.
You also said it, but it's for the balance sheet items. I am only talking about revenue items. Okay, let me just brush. Completeness.
Cut off.
Accountability.
Cut off.
Accountability. Correctness.
Accuracy.
Accountability.
Occurrence. Measurement. Regularity. And all this put together, disclosure. Right? Very, very simple things. Just remember these things while I am taking you through the next slides. Okay? Now let us come to balance sheet items. Sir. Existence.
Ownership. Obligation.
Ownership. And valuation. Critical. These are critical aspects, right? And as in the case of revenue items, you have disclosure and completeness. Okay? So with this background, I'll just delve into what are your responsibilities a little bit as a reviewer for the technical standards. And by the way, this is not a lecture on standards on auditing. Because if I have to do a lecture on standards on auditing, each standard will take 1 hour. We don't have that kind of time. This is only to tell you about the minimum issues that you need to see as a reviewer. Minimum. You can do more, but not less. Okay? And I will encourage you. How many of you have read the standards on auditing in the last maybe 3 months? Don't worry. I'm with you. Before yesterday, I did not read. I did not brush up. I've read it, but not in the last 3 months. But for the purposes of presentation, I went through the entire gamut of 31 standards yesterday. So that, you know why I did it? The reason was just to face questions from you. Otherwise, it was not important for me. But as reviewers, you are required to know all the 31 standards. Otherwise, how are you going to guide them? Unless you know, you can't guide. So remember, reviewing, and that too, category 1 audit firms, is a very, very remunerative job. You get good money for the amount spent. You get anything about ₹1,00,000 or so for just about a week's work, which is very good income. But you must do your job diligently. And for that it requires real hard work. And the hard work starts with reading the auditing standards. Isn't it? Without effort, there is no fun. So having said that, let me take you into my presentation. What standards are we talking about?
Accounting auditing.
Accounting
Auditing.
and you have standards on auditing, standards on review engagements, standards on assurance engagement, related services, and of course our quality control. Frameworks issued by the institute and the applicable provisions of the various statutes. You have to be very, very clear about these things. And unless you are very clear about these things, what will you do when you review the documentation of a peer practice unit? And believe me, I am telling you this, I have reviewed category 1 practice units. I have done more than about 4 or 5 of them till now. And for me, though I told you that it takes 1 week, it took much longer time for me. Because believe me, our brethren require handholding. You are not there to boss over them, but you are there to handhold them. Remember, you are our first line of defense for the institute. We have our FRRB, we have FRRGs, then now we have NRFAs, though that's an outside body. But please understand, we as reviewers are friends of the practice units. But when I say friends, don't push things under the carpet. You tell them that you have done wrong, you tell them there is deficiency in whatever you have done, and guide them into a positive way. Because if you don't do it, remember, your certificate, on the basis of your certificate, they will be certified as compliant. And God forbid, if there is an FRRG check on them or an NRFA case on them, you are finished. So be careful. It's not so rosy as it looks. So whatever you do, do your job diligently. Document your job diligently. Whatever the practice unit does is one part, but whatever as a peer reviewer you do is more important. So you have to document your queries, skepticism, again all these things, you have to document. I'm not trying to frighten you, but these are the requirements. Okay, let's start with the standards on auditing. I will take you through each of these standards and what are the basic minimum things that you need to say under each standard. Okay? You might turn around and say, sir, but the standard says you have to do this too. Like for example, in case of third-party confirmations, NFRA in one case said, you are supposed to send the letters. Give me the proof that you as a practice unit have sent letters of confirmation. So the auditor turned around and said, sir, the company sent with my address the confirmations I received, and in case where I did not get proper responses, I did the further checks. The NFRA turned around and said, look, the standards have not been written by us. The standards have been written by your institute. So you bloody well follow. You understand? So they are coming down very heavily on us. And therefore, we are here, one, today to learn. Tomorrow you take your exam and become a peer reviewer. You will be certified peer reviewer. And then you are there to guide our brethren. So therefore, be sure that you know your standards on auditing perfectly. And once you know the standards on auditing, two advantages. One is it will benefit the brethren of Karnataka or Bangalore from wherever you are. And the second most important thing is the quality of your own audits will go up. Your quality will improve drastically. I have seen that happening in my firm. And the same thing is going to happen to you. SA 200 objectives. The reviewer should identify whether the practice units have conducted the audit as per the standards on auditing. So, how do I as a reviewer check that? Suppose you place yourself in a reviewer's shoes, how will you check? How will you answer this question?
standards of auditing checklist has been updated?
First of all, you need to have a checklist. And believe you me, as of today, many of the firms don't have this checklist. So, but just because they don't have a checklist doesn't mean that they have not performed. I mean, you must understand this. So there is a lot of issues that we need to be very clear. So therefore, unless you have a checklist and you define what are the things to be done, check whether the practice unit has done that or not. Whether it has been properly documented. There need not be a checklist. But you as a practice, I have utilized that. For all my peer reviews, I make my own checklists. Now, of course, the peer review manual has given a part of it as checklists. But I have my own checklist, detailed ones. And I use my own firm checklists also in some cases, where for CARO or accounting standards, Ind AS, we have our own checklist, so I follow that very diligently. But Ind AS is less because many firms don't have audits which attract Ind AS. And the reviewer must also identify whether the auditor has exercised professional skepticism and professional judgment throughout the audit. Like the previous speaker was saying, how will you as a peer review come to a conclusion on this?
Based on the documents.
Sorry?
Based on the documents.
What document? Professional judgment. Okay, some sort of a documentation will be available. What is given a circumstances, situation, conclusion arrived at, professional judgment, agreed. Skepticism. These are small things but very critical. Skepticism comes in depending upon the number of queries raised. One of the things, it can be other things, queries raised and minutes of the meetings, what was discussed, whether these will show whether the auditor has been maintaining professional skepticism. Then agreeing to the terms of audit. We call it, the simplest of the formats, we call it the engagement letter. How many of you take engagement letters diligently? All audits, every audit, tax audit also? Good. No? For certifications?
Yes.
Pretty. And in all the engagement letters, including certification, you tell them this is your responsibility, this is my responsibility, I will be following this framework. Do you do it?
Yes.
Don't worry, for people who are doing it, very good. For people who are not doing it, start doing it immediately. Because you have to insist others to do it. It's very critical because it is an agreement. An engagement letter is typically an agreement between the auditor and the auditee. That you are supposed to do this, I am going to do this, my work is going to be dependent upon this framework, and also we will also, as a part of our engagement letter, we say, we are subjected to peer review, so these documents may also be reviewed by the peer reviewer, therefore you cannot claim confidentiality.
That is it.
Is it? Regular standard, our institute has been kind enough to give a standard engagement letter. But please don't copy. I came across a peer review unit, practice unit, which had the same typical engagement letter, whether it was a proprietor, partnership firm, company, NGO, for everything. When I asked for an engagement letter, they would show. I said, what is this? It says Companies Act and all, this is a partnership firm. No, nothing. They don't bother. See, so obviously what they have done is, for the purposes of peer review, they just printed one and kept it. Please don't do that. So let us see whether the scopes of roles and responsibilities are defined. And whether the fees quoted. Another important thing is whether the fees quoted are reasonable. In one case, they were doing private limited company audits, and the fees charged was 200 rupees. So, please avoid these things. The reviewer should assess at the firm level and at the engagement level the controls, whether the controls are there. as you know, remember what the previous speaker said regarding documentation. Firm level controls, engagement level controls. So at the firm levels, you will have a beautiful documentation. You come to my office, the moment the peer reviewer comes, we give him my manual, firm manual. Normally they are floral. But the more important thing is you have to actually go through each paragraph of that manual and see whether it is actually implemented down the line or not. So there are two aspects. You might have a beautiful manual, but whether it is implemented. So the controls that you have should not be only on paper, but should also be actually implemented. Whether you also have to check whether the firm follows the ethical practices on acceptance and continuance. Why is it so important? Acceptance and continuance. What is there? He's been our client for so many years. What is there to accept? And what about continuance? We are the auditors. So what is new?
Any kind of risk which was identified in the last year can be taken care of in the current year, let's say by designing or changing or increasing the scope or doing any amendments required.
Familiarity threat.
Sorry?
Familiarity threat.
Familiarity threat, agreed. There's something more to it. Whether there are any circumstances that have changed in the auditee's organization or in your organization which can prevent you from auditing. So you have to actually document it, saying that none of my staff nor my partners have any relationship or any pecuniary relationship or they have any transaction or they are holding any shares. This is very critical. Every year we have to do it. So we have a document in our office which every person in the office has to sign, and that is for we have a list of clients, and everybody goes through the list of clients and they say so and so, so and so, so and so. In one case, we suddenly realized that one of the relatives working in an organization, that person's nephew had joined our firm. So we had to ensure that that person was never sent to an audit for that audit. So these are the issues that become very critical, for acceptance and continuance relationship. Or there might have been any other situation which can prevent you from becoming an auditor. Or you might decide you don't want to take a risk. Suppose there is a CBI case. You don't want to get involved. So be it. Nobody can force you. You can say no and document it saying that because there is a CBI case, I don't want to waste my time going around CBI offices, I will not do the audit. You might still be called to the CBI office for the last couple of years work that you have done. That's a different issue. No fresh burden. And while you are doing that, you have to ensure that the engagement performance is being monitored. In most of the cases that I have seen, the engagement partner goes directly, he has a couple of assistants, they do the audit, come back. But the quality control partner and review partner are not monitoring at all. In small firms, difficult, because it will be just a 2-man army or a 3-man army. But how do you do that then? Then I would suggest that you make an outside chartered accountant as a review partner. It will help you. So please ensure that your work is monitored. Audit documentation, 230 I will not go through because it's been adequately handled. Then auditor's responsibility for fraud on audit of financial statements. What is the basic thing that you do? You inquire. It is not necessary that the auditor should be responsible for finding the fault. I am telling you, across the world, till today, the statutory auditors have never found a fraud. I am telling you, this is a statement of fact. You can check with the Institute of Chartered Accountants, the CPAs, world across.
Having found the fraud, not reported.
Sorry?
Having found the fraud, not reported.
Having found the fault, a fraud not reported. Huh?
Because there is a dispute with respect to whether there is a fraud or not. And if you say
But as long
fraud,
that is fine.
if you say fraud, then you are responsible to prove that it's a fraud.
No, not necessary.
Especially in the case of Bangladesh, you had a suspicion and every other thing like that.
So you document your suspicion and put it in your report, no?
That is done. But I didn't want to call as a fraud. Because somebody suggests that if
Be
you call-
careful. You are treading on thin line.
Like if you call it as a fraud, you have to prove that it's a fraud because the other party.
Proving that it is a fraud is very easy for me. It is like a police. I will put an FIR. XYZ has stolen the money, and I will go. Who has to prove? I will say that here is a case that money was taken to a bank. I am just digressing for one moment, okay? From the loan amount was taken, from there it was siphoned off. Cash was drawn. It is fraud according to me. Finished. That's it. I will not talk anything else. Let that fellow prove that he drew cash for paying salaries. Let him prove. Now, why am I bothered? Now, if I don't do that, I will be pulled up by RBI. So, why me? His neck is better than my neck. Okay, I'm telling you, it's very easy to say that the other person has committed a fraud. So, where our job as far as fraud starts, when you start asking questions of the management, those charged with governance, the internal audit team, and the accounting team and other persons with whom you are interacting during your audit. You have to make specific inquiry and document it saying that, has there been a fraud in this organization? Let that fellow say no, write his name and say this fellow answered that it is not there. Better still would be give it to him a question in writing, ask him to give an answer in writing. Period. So that will be a major first step. Because from there your risk assessment will start. Materialities will start. I will come to that materiality level. I am telling you, most of the firms in India do not know how to peg the materiality levels. I will try, when I touch that, I will tell you how to do it in a very general way, but I'll just tell you. And if there were any unusual or unexpected relationship while performing the analytical procedures, whether the auditor has evaluated them to assess the risk of material misstatement due to fraud. This becomes a very important aspect. And if there have been inconsistencies in replies, how has the auditor gone ahead and investigated? Then consideration of laws and regulations. Whether the written representations have been asked that all known instances of non-compliances and suspected non-compliances have been considered in the making of the financial statements, and whether all of them have been disclosed to the auditor. I mean, in my biodata, you heard that I was on the audit committee of Rotary International. $2 billion is my responsibility. Sitting on the audit committee, I can ask all questions. And there was a particular issue where they were talking about a liability. I asked them, how much is the liability? Sir, it is not fixed. I said, outer, how much is the liability? They said, X amount. Then I said, have you disclosed this to the auditors? The management turned around and replied that they have not. I said, as an audit committee member, you are telling me, and to the auditor you have not disclosed, so tomorrow the auditor can turn around and say, you have not disclosed, then the liability is on the organization. Isn't it? Then they said, sir, our materiality level is this, which we are clearly disclosing in the financial statements. And the expected liability is below the materiality level. So you understand how organizations work, and especially if you are doing an audit of a company which is doing the audit of very large organizations, then these are the aspects that you have to understand. Just because it has not been disclosed to the auditor or it has come to your knowledge in some other way doesn't mean that it is material. So you please understand, and you have to be very mature when you are doing these things. At the same time, safeguard yourself.
But here you have to use the profitable skepticism.
Yes. Judgment. Judgment. Skepticism anyway you will maintain throughout. Like somebody is giving you sweet, sugar. You will say, will it taste sweet or not? That is skepticism. Just because it is white, it need not taste sweet. You have to ask, you have to tell yourself whether it is correct or not. So that is skepticism. Whereas judgment, whether it is required, correct or not, then it becomes a this communication with those charged with governance, all the significant findings, whether they have been communicated to with those charged with governance. It's very important that you have documentation to state that this has been communicated. The form, timing and expected general content of the communication must also be communicated to those charged with governance. The reason I am saying it is, if you have made a finding at any point of time during the audit and you make the communication right at the end of the audit just before the day you are signing, it doesn't make sense. Isn't it? You have to, on a very timely basis, you have to communicate with those charged with governance. Sorry? Immediately. As soon as possible, you must do it. Communicating the deficiency of internal control with those charged with governance. This also on a very timely basis. Planning an audit of financial statements. We all do the audit of financial statements. How many of us actually plan? Plan in the sense, properly document the planning. We do it in our mind, no doubt about it. Otherwise, you cannot do the audit. But how many of you actually document it? That this is what we are going to do, this is where the audit is going to focus, and this is how we are going to proceed. The scope, timing, direction of the audit. And it should be such that it should guide the development of the audit itself. And also while you are reviewing the work, you must be able, the plan should be such that it should be flexible. It should be capable of being changed. And for all this, documenting is the most important thing. Okay, identifying and assessing risks of material misstatements. How do you do this? At the beginning, how do you do this?
Nature of the industry.
Excellent. What else?
Management change.
What do you call all this? You are right, sir. But what do you call all this? Knowledge of business. Knowledge of business. So unless and until you have a proper knowledge of business, you cannot identify the risks. So therefore it becomes very important that you have obtained an understanding of the entity itself, relevant industry, regulatory and other external factors including applicable financial reporting framework, governance structure, operations, ownership, financing, the entity's objectives and strategies. This becomes very important because if the entity's objective, you come to know that the entity objective is to go for an IPO, risk involved. So you have to be careful. So therefore their objectives and their strategies become very important. Then the related businesses that can lead to misstatements. Measurement and review of entities' financial performance. Materiality in planning and performing the audit. Whether the materiality and performance materiality has been determined. When I say materiality, it is overall materiality. When I say performance materiality, it's much lower than the overall materiality, because that will give you the basis on which you will accumulate the materiality and see whether the overall, you will decide whether the there is a misstatement in the financial statement. Okay? So for example, if you think that the overall materiality is say 2%, 2% of the assets, or you decide it is 1% of the turnover, okay? That can be your basic materiality, overall materiality. Now you as a firm have to decide what will be your performance materiality. Your performance materiality can be 0.5% of the overall materiality or 0.75% depending upon your risk appetite. And to decide whether it is 0.5 or 0.75, sorry, I'm coughing so much because just came out of 2 weeks of cough, cold and fever. And here I am, Bangalore, first time after that. Anyway, so you have to decide and document why you are choosing that. So you have to decide whether your risk appetite, you decide that this company is fair, the internal control system is good, the integrity and the character of the management is good. They have very good persons who are charged with governance, and therefore I would say I will peg it at 0.75. Now if you decide that the management is known to play tricks on the auditors, bring it to 0.25 itself, because then you will have more scope. So document all these things when you have. Or different classes of transaction, when you are doing the substantive test, you do for classes of transactions, assets, different things. So for everything you have to have materiality and performance. And any revision on the above, you will also have to be careful that if at all while doing the audit you go with a very open mind saying that everything is hunky-dory, and suddenly when you jump into the audit you find that there is a scope of misstatement, then you have to bring down the materiality. So that is why you are bringing down the materiality. Any revisions on that you have to document. I will take another 10-15 minutes and I will go pretty fast. How you respond to the assessed risks. Whether you have performed the audit procedures, the nature, timing, extent are based on and are responsive to assessed risks. They should be responsive. Whenever there is an assessed risk and if it is as per your assessment, or earlier you thought that this is my risk, everything is fine. If there is any change, it should be responsive to it. And what are the tests of control that you have done? There will be a lot of internal controls within an organization. So what are the tests of control that you have done? And these need to be documented. Then how do you evaluate the misstatements identified during the audit? Whether any mistakes have been identified during the audit. So in this I want to just tell you that it becomes so important for a reviewer to go through every paper in the practice units files, every paper. You can't just go and say, okay fine, here is a set of balance sheet, these are the lead schedules, these are the the queries made, responses given, these are the checklists. There will be heavy, like in larger firms there are huge files. So don't take any shortcut. You have to ruffle through every paper, because there might be case where the auditor has come across some misstatement, and it is also possible that because of the pressure to complete the audit, the auditor might have overlooked it. I wouldn't say he has done it purposely, but he might have overlooked it because of shortage of time or pressure. So you need to be very careful that you go through it, and once you see that there has been a misstatement that has been identified, you have to ensure that you help the practice unit ensure that they have properly documented how they have overcome it. And whether this has been communicated to the management or those charged with governance, unless it is prohibited by law. For example, if there is a investigation going on, or you have been asked by the investigators to do a specific review, not as a peer review, but a review, in which case they will also tell you that whatever are your findings, you are not to communicate to them. You have to communicate to us. So if it is prohibited by law, in which case you don't communicate to them. Audit evidence. Whether the auditor has obtained sufficient and appropriate evidence. Beautiful sentence. A lot of auditors have gone underwater because of this sentence. Sufficient and appropriate. What is sufficient? Sufficient means whether the evidence satisfies the objectives of the audit. Appropriate characteristics of evidence. Whether all the characters, the 5 characteristics of evidence are satisfied or not. So be very careful whenever you come across the sufficient and appropriate. If you take the standards, every alternate page has this. So your documentation is required for this. So you be very clear whether the scope of the audit is properly documented, and then whether the audit is relevant, objective, timely, authoritative, and direct. These are the 5 characteristics. And then verify that the sample selected to test the sufficiency and appropriateness of the evidence. Now, how will it be if there are, say, 10,000 transactions of sales, and the auditor has said, he says that I will take 5 samples. Will it be appropriate? Will it be sufficient? Only a sample of 5 in 10,000. Maybe, if out of the total 10,000, there are 40 or 50 transactions that cover 95% of the value. So be careful. Just because there are so many transactions, it doesn't mean that it is just not sufficient or anything. So you have to apply your judgment there. Otherwise, you will be putting the poor practice unit into problems. Specific consideration on selected items. Existence and conditions of inventory, very, very critical, and industry specific. We were doing the audit of HPCL, Hindustan Petroleum. There the inventory is flowing. So you have to be very clear on how and what basis you will be calculating the quantum and the value. Value is on weighted average, so you have to be very clear on what basis. So there are a lot of considerations on it, so every industry will have its own problem. And in case of litigation, whether the information on the litigation given is complete, and the claims or details of the claims on the company is given, because this directly affects your financial statements. And segment information, whether it is properly presented or not. I talked about external confirmations. Whether the auditors have obtained further evidence to resolve the doubts about the reliability of the response and confirmations, and whether he has performed alternate audit procedures. I told you about it. Initial audit.
Regarding the litigation, Pro 42 is much more than what the management.
Sorry?
There's a software called Pro 42.
Yes.
Which is even our insulin. That gives much more larger litigation than what was even the management.
True, I understand. But despite that, you have to get it in writing from the management.
They are getting it.
Yeah. You have to get it from the management. Despite you use anything you want, all tools you can use. But what you could do is you can get that information, take their representation, and get a confirmation that this is complete. Because there also there is a time lag between the tool and the actual fact.
Correct.
So you need to work on that.
You need to verify and get their opinion on it.
Yes. Initial engagement. This is very simple. Opening balances. Previous auditor has done the audit. You have to take the opening balances from the audited statements and check whether your opening balances are correct. What else will you check, sir?
Early report is there in issue.
Yes, it is there. What else? Out of the report, what will be checked?
Qualifications.
Everything is clean reports. Accounting policies.
Policies.
Yes. Change the policy.
Consistency. You have to certify that it is consistent. Then analytical procedures.
So what we do in case of a small proprietary firm, the earlier auditor has not seen any accounting policy.
Ground reality. But from our side, we have to be careful. So when we are doing analytical procedures, what happens is if we ask for certain data and we get this data from the organization. Your duty as an auditor is not just to accept it and do your analytical procedures. You have to verify from what data source the data has come. Whether there is a possibility of manipulating the data. What are the controls over preparation of the data? You have to please understand this. Most of us don't do it. So you have to be very careful. We accept the data as it is given to us. But please use your skepticism. And whatever are the assertions that you are looking at, you take that into account. Then audit sampling, I'm a part of it anyway. Whether the purpose of the audit procedure and characteristics of the population have been considered while designing, we talked about it. Sample size is sufficient to reduce the risk. And each sampling unit, this is very critical. When you are taking samples, please understand that each sample should be capable of being picked up from the population. That is what is critical. I had a great experience in auditing when I asked them the basis of sampling. Their answer was, sir, random sampling. And believe me, that answer doesn't work. Random sampling is good for statistics paper when we did our inter or whatever. But not for audits. You have to be very, very clear. Auditing estimates including fair value accounting. Whether the inquiries have been made about the changes in circumstances warranting revision of accounting estimates. Nowadays we do accounting estimates in most aspects. So whether you have actually made inquiries, understanding how the management makes accounting estimates and the data which they are made, and review of the outcome of estimates including the prior period. When you are doing it, just try to see what has happened in the prior period and whether the similar thing has been done or not. If not, you will understand they are trying to mess with the figures. So estimates can become very, very critical. Especially in risk companies where profitability is a game. Related parties, we all know you have to ask about take in detail the relationships with within and outside the company, and whether there has been any changes in the relationship. What are the transactions that have taken place, and whether these are in accordance with the financial reporting framework. So definition of related parties is different in Companies Act, more different from what is required in SEBI and all. Please be careful where you are reporting, how you are reporting, and what is the impact on your financial statements. Subsequent events, again I am going fast on this, take it from the management whether there are any events after the balance sheet date, and whether there are circumstances which would require you to make any changes in the financial statements. Very important, if there are any minutes of the meetings that are held in the management, please take a copy of it, record it, and go through it so that you are very clear about the subsequent events. And the latest subsequent interim financial statement also should be verified to see whether an impact is there and how it is there. Going concern, very clear, your skepticism throughout the audit is critical. Going concern, sometimes it becomes everything is hunky-dory here. I'll give you an example. There was a company here having a manufacturing unit. The sole purpose of that manufacturing unit was to supply material to Ukraine. Now there is a war in Ukraine, and while inquiring we came across that the main factory was bombed. So then immediately we realized that the question of going concern immediately triggers here. So we had to do a lot of research. Finally, of course, we gave a modified report on this.
Even during COVID will also going concern was a concern.
COVID was a going concern, and the institute has come out with beautiful guidelines. Yeah. We all take written representations. The whole idea is to tell the management that they are also responsible. It is not just the auditors. The management itself is, because see, the Companies Act says that the management has to sign the balance sheet, the financial statements, and give it to the auditor for audit. That is what the Companies Act says. So this means that it is the responsibility of the management to actually go through every line item on the financial statements, pass it in their board, approve it in their board, and give it to us. Very good as far as law is concerned. Practically what happens? You do the audit, then across the table you sit, managing director you sign, another director you sign, sir, congratulations, and you sign. Okay, this is practical. But remember this, you have to tell them that though I have taken up the audit in advance, you are supposed to have done this. Using the work of internal auditors, your job, competence of internal audit, scope of internal audit, whether out of the scope of internal audit you realize that there is something which needs to be done more, than whether you have to change your scope of audit, whether you will have to do any specific substantive tests, all these things will come up. Technical competence. 700s is all about reporting. Whether they have been prepared in all material aspects and in line with the reporting frameworks, and whether all the contents as required in 700 are included in the auditor's report. What are the contents, sir? Sorry? Basis of opinion. Auditor's responsibility. Management's responsibility. Sorry? Key audit considerations. Other matters, other regulatory matters. What else? Emphasis of matter.
Opinion.
What is emphasis of matter?
Now it is not there.
What is emphasis of matter? Just for my knowledge.
It's the focus what you have to.
It is a?
Shareholder has to focus on those matters.
What is your responsibility as an auditor on the
You have
emphasis?
to bring the notice to the shareholder.
Draw
You are not
attention.
qualified in that one, but
Ah.
you are bringing notice to the shareholder.
So how will I bring it to the notice? And when will I bring it to the notice?
Only through the report.
In the audit report only, obviously. But under what circumstances will I bring it into the audit report? As emphasis of matter. If and only if,
Going concern.
No.
if and only if it has been,
Public.
if it has been mentioned in the notes or elsewhere of the financial statements by the management. If the matter has not been touched by the management, you cannot take it into emphasis of matter, because then your hands are tied. The only way is to modify your opinion. Okay. And key audit matter 701. That's fine. I will not go through this. Modifications of opinion. So you have to be very clear whether the auditor has. Is there anything in the documentation where the auditor should have modified the opinion? You have to be very clear. And if there is material misstatement and there is sufficient appropriate audit evidence that they are free from material misstatement, only then you are unmodified. If there is any item which says that there is a misstatement, you have no choice but to, okay, emphasis of matter I have done. Comparative information. Very simple, sir. Previous year figures, comparative. Shall I jump this? You know? You're sure? Then before that, tell me what are the precautions.
Classification.
When there is a difference of opinion between the auditor and our peer review auditor.
Regrouping,
Sorry?
Regroup.
Regrouping?
or reclassification of particular item.
Regrouping or reclassification of the previous year audit report.
No, previous year,
When we are
assessment.
comparing, if it was
Now, is it allowed to reclassify previous year audit report?
No.
Not audit report, the financial statements.
No.
No, figures. Yes.
Figures.
Current year, we can regroup.
Current year.
Yes. Not previous.
Previous year you can't touch now.
We are comparing the current year.
That's in the notes only, no? You are not touching the financial statements. Ind AS, anything that you want to do for the last 3 years and all that first initial preparation, you do it in the notes only. You don't touch the financial figures at all. Whether the figures tally with the previous year figures and the comparative information is consistent. See, notes also part of financial statement. So, we normally what we see, including me, is the balance sheet figures, previous figures, you give it to your assistant and I compare and give. We forget about the notes. The notes also is very critical because there the comparative figures will come in. So be careful about that. Auditor's responsibility with respect to other information. What are the arrangements that the auditor has done with the management to ensure that other information prior to the date of the auditor report is received by the auditor?
Management. Management representation.
You will take the management representation after having okayed the... No, you might not sign the balance sheet, but you say, okay, from my side it is clear, and then you will wait for the management representation.
No, in the engagement letter time.
Now,
Engagement letter is too early in the day. The moment when do you give the engagement letter?
that is.
Before
Much in advance, right? So it doesn't work like that.
Meetings.
board report.
Sorry, no?
Board of directors report.
Board of Directors report. It contains a lot of information. So it is your duty as an auditor to see whether the information in the Board of Directors report is consistent with the financial statement. And in case it is not, then you have to decide whether there is a need to revise the statement itself or you want to change your report. You want to modify your report.
Even secretarial report, CSR.
Your responsibility, because all those things will form part of your business. So those are the other information, so you have to be responsible. Because what happens is, one of my clients, not long ago, is a public limited company, so I gave a qualified report. In those days we used to give qualification. So that fellow said, alright boss, everything is over, I filed with SEBI and all. Next year when I was doing, I said, give me the printed balance sheet. The audit report was different from what I gave. The qualifications were not there. See, all these standards and all came in 2009. I am talking about...
No, even recent
Even
year.
now also it has.
Sir, even
Yeah.
recent year in Delhi, the management filed a report, published it even before the audit is received.
Why the company secretaries ask for the Word document from your end?
So be careful, sir, for all these things. Special consideration, the audit of financial statement prepared in according to special purposes. You should be very clear why the financial statement is being prepared, the purpose, who are the intended users, and the steps taken by the management to determine that the applicable financial reporting framework is acceptable to the circumstances. Very critical. Because they might give any format they want, they might want you to sign it. Please don't fall into that trap. And they might also come and say, what sir, you are making so much of us? Last auditor signed, sir. Common statements, don't fall into that trap. audit of single financial statements and specific elements of accounting. Whatever happens, you have to satisfy yourself that the applicable accounting standards have been complied with. Simple. Then engagement to report summary financial statements. Who can sign summary financial statements?
Auditor word sign.
Hmm?
The auditor word sign the.
Sir, you have done the audit. The management comes to me with your audit report and says, sir, here is the audited report. Please, can you please help me sign this? Acceptable? I can say that, based on the audit report of Mr. So-and-so, can I do it? No. It is to be signed by the auditor who has done it. They have to understand these are pretty common. Whether the audit has evaluated whether the summary financial statement adequately disclosed the summarized nature and they have to identify the original statements also. Okay. Now, finally, in short, you have to decide whether the practice unit has a system of ensuring the following have been complied with. The accounting standards, auditing standards, frameworks, guidance notes, SQCs, relevant notifications and directions. Whether the sample selected by the BU is sufficient and appropriate to arrive at the conclusions. Whether proper working papers have been maintained. Whether basic assumptions of the audit have been appropriately considered. Your responsibility is onerous, my friends. The future of our profession depends on you. You are our first line of defense. Today NFRA has come in because of certain things that we did not do in the past. So let us not give a chance to the government to bring in unnecessary controls over us. And therefore you are our first line of defense. So do your job diligently and I am sure, the profession is in good hands. And our future depends upon how you will be able to guide our brethren. Do not hesitate to pull up the fellow professional because you will be helping them. And if you don't do it, you will be bringing disgrace to the profession itself. Apart from creating a problem for yourself in front of other agencies. Remember that you are a mentor and a guide rather than an enforcer. So thank you very much and wish you happy review. And if you have any questions, I will be glad to take. So thank you so much. Thank you.
Thank you, sir. Thank you for the overview which you've given, and also thanks for reminding the basics which we started the audit paper with. I request Treasurer of Bangalore branch to come up on the dais and hand over the memento to our speaker as a gratitude. This is on behalf of Bangalore branch of SRS. We'll take a quick coffee break for 10 minutes and we'll reassemble quickly, and we have the last technical session which will be taken by GKF. So we'll shortly reassemble.